Well, let's start with the signs of economic recovery. What are we seeing?
Yeah, look, there's been some really good news released over summer. ABS has been really busy. We've seen some very, very good retail trade data come through for November. It was up 7%. The really big increase was Victoria. Victoria opening up again. People went back to the shops and really started setting up big. Also, employment numbers were particularly positive. So what we saw with job vacancies was that we are now at a level higher than we were prior to the pandemic. And some really good news in terms of what's happening with the unemployment rate.
Yes, I was reading, according to the, the ABS, there has been an increase of 23% in the number of job vacancies in Australia over the November 2020 quarter. I mean, that's extraordinary.
Yeah, look, it is extraordinary, and it has got some very, very positive flow-on effects. I mean, the big one really is around household wealth. We are now at the highest level of household wealth ever recorded in Australia, but primarily driven by an increase in deposits. So people not travelling, not being able to be entertained like they were prior to the pandemic has meant that a lot of people have been saving a lot more money. Other things that have driven household wealth include increases in superannuation balances, but also house prices. I mean, again, we speak about this every week, but the fact that house prices have gone up has created high levels of household wealth for a lot of individuals around Australia.
So we haven't spoken for a couple of weeks through Christmas. Have they still been going up?
Yeah, look, prices are moving very, very quickly. I mean, depending on where you are, there are some much stronger conditions compared to other locations. The area that we are seeing the most widespread price growth is in Sydney at the moment. 95% of suburbs are continuing to see price increases on a year-on-year basis. And then we've got places like Canberra doing really, really well in terms of price growth. So, but across the board, I mean, there's pretty much nowhere where we're seeing price declines at the moment. There's still a lot of weakness, though, in Melbourne. Melbourne does have quite a few challenges still ahead of it, and also Sydney apartments, still pretty weak demand off the back of very few students coming back and pretty low rental demand as well.
And Nerida, how's retail trade going?
Yeah, the retail trade is up, so people are heading back to the shops. The big one, as we mentioned before, is really Victoria. That the fact that shops are open again is allowing people to get back there and spend again. Positively, people are heading back to cafes and restaurants. So if we have a look at the three most COVID-impacted sectors, it was hospitality, tourism and education. Still some really big challenges in the education sector. Obviously, tourism is improving, but we're not seeing the rate of improvement as we would hope, certainly during the summer season. And then we also have hospitality, and with all cafes and restaurants opening again, a lot of the COVID restrictions starting to ease up. A lot of the problems we had over the Christmas period are starting to ease up again. So some very good news for employment numbers there, and some really good news for retail trade as well.
Yeah, also including live entertainment, sporting events and so forth, seeing restrictions, but good to see those industries opening up also. What about the private sector approvals? They rose for the 5th consecutive month in November. What were the main drivers?
Yeah, so housing approvals have gone through the roof. We actually saw the highest level recorded since 1999. So, since last century, we are now seeing the highest level of building approvals. A lot of it has to do with coming back to those high levels of savings, that increase in household wealth. We have seen a lot of money being poured into property, and new development in particular has done well, primarily because there has been some very, very strong first home buyer activity. So first home buyer activity has been driven by the 5% deposit scheme. It has been incredibly popular with first home buyers. There are state government grants available in every state, so that really helps them along. And then, of course, home builder has been a particular positive for the house and land sector. It hasn't had such an impact on apartments. New development of apartments still remains fairly sluggish, but certainly for new houses, we are seeing lots of first home buyers, lots of upgraders getting into the market and really driving those figures.
There were some downfalls though, unfortunately, including, reduction in the trade surplus in November.
Yeah, the trade surplus did fall back in November. So obviously the problems with trade between Australia and China was a big driver. We did have slower exports than the previous 12 months. So a lot of things that we were exporting to China, we had seen a few blockages at that stage, obviously with lobster, wine, barley. coal were the big ones. We did see a bit of a drop off in iron ore as well. So iron ore is the sector that continues to do incredibly well, and China is a little bit challenged in terms of where else they can get iron ore. So it does put Australia in a good position there. The one positive we did see was a lot of gold exporting taking place to Singapore. So that was one of the bright sparks in terms of the trade surplus. So although we had these challenges with China, particularly around a range of commodities, we did see some pretty high levels of exports heading out to Singapore.
What about tourism? I mean, we're hearing some good stories about interstate tourism, but there are certainly plenty of other challenges with border closures, etc.
Yeah, look, tourism is a challenge. I mean, one of the things that is a positive is that Australians tend to spend more overseas when they travel than overseas travellers spend in Australia. So if we can capture that Australian spending locally, that is very, very good news. Border closures are particularly problematic. I mean, as soon as you slam borders, it does make people a little bit nervous about travelling interstate, particularly up to Queensland. You know, that is a very popular tourist destination. What we are seeing with tourism is that employment is coming back. You know, it is a sector where employment is looking a lot better than it was previously. But more negatively, we are seeing far more part-time jobs in the tourism sector than we are seeing full-time jobs. So that's the big switch, and probably the main negative at the moment is that jobs are coming back, but they're not giving people the hours that they did have prior to the pandemic.
And rentals have been an issue too throughout COVID in many places. How are they going?
Yeah, look, the rental market is recovering. So it has been the most impacted property sector during the pandemic. So we did see a sharp rise in vacancy following mid-March, and a lot of drops in rentals early on, and a lot of Airbnb listings converted to long-term, or foreign students not coming back. So, you know, there was this whole range of factors that made conditions really, really challenging. What we're seeing now, we're still seeing a few problems in unit markets in Melbourne and Sydney. So Melbourne in particular, inner Melbourne Melbourne CBD has around 4,000 vacant apartments at the moment. So still very challenged there. But if we have a look at somewhere like Perth, I mean, Perth is now the strongest rental market in Australia, and we are seeing pretty much every suburb in Perth now seeing rental rises. Pricing still a little bit patchy in Perth, so we're not seeing we are seeing price growth, but it's not as strong as what we're seeing in the rental market. So it does really seem to be a precursor to some very, very strong conditions in the Perth market in 2021.
It's going to be a very interesting year ahead, but as you said, some really positive stories, but not so positive ones as well. Nerida Conisbee, Chief Economist of the REA Group. Take care. We'll see you next week.
See you then.